Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday, the 10th of August 2021, and we're producing our gold and silver Tuesday morning update and gold and silver price forecast. Late on Sunday evening, we saw a flash crash in the Asian Bullion market, with gold and silver plummeting. By Monday morning, we had seen a moderate recovery, and yet yesterday, we're beginning to see that recovery wane and progress fall back a little. Today we provide details of what we see happening and why Wednesday could be particularly important. So let's take a look. Welcome to Illuminati Silver. It's Tuesday morning, 10th of August 2021, 09:30 GMT plus 1. And the climate outside is middling. Yes, middling. For those who are unaware of what that term means, it's broadly average, pedestrian, not out of the ordinary. Neither wet, nor dry, sunny, nor dull. But that cannot be said about the news today. Oh no! If we look at Bloomberg, main headline, outgunned crypto lobbyists falter in bid to fix broad tax rules. Oh my word, what has happened here? Well, cryptocurrency lobbyists were caught ill-equipped in one of the first legislative battles for their nascent industry, despite a Herculean push that impressed Washington insiders with its intensity. The industry failed to win a change to crypto tax reporting rules in the infrastructure bill on Monday, leaving intact language for broad oversight of virtual currencies in the legislation that's poised to pass the Senate. But despite that, what happened to crypto prices? They went up. UK retailers report slowdown as post-lockdown rebound fails, and we wonder whether this could happen in the United States as well. UK retailers reported their slowest sales growth in 5 months during July as consumers shifted towards spending on entertainment and social gatherings, and away from in-store shopping. The volume of goods sold in shops and online grew 6.4% in July compared to last year, the British Retail Consortium and KPMG, who are accountants, said. A separate survey from Barclaycard, which handles almost half the credit and debt card payments in the UK, showed more money going into bars, theatres and sporting events, and a drop in face-to-face retail. Well, that's perhaps because we've all maxed out of items we wanted to buy. Mainly bought, let's be blunt, on Amazon or eBay. But nevertheless, people needed to get out. And this seems to be what they are doing. What effect that will have, of course, on the COVID-19 and Delta variant remains to be seen. Let's go back. Bank of England has a powerful tool to tighten policy without raising alarm. What can this be? Inaction could be a powerful option for Bank of England officials looking to scale back stimulus for the economy and shrink their swollen balance sheet. In a surprise move, Governor Andrew Bailey last week indicated that a modest tightening for monetary policy is likely in the next few years. Now note that, few years. When the time comes, it will begin with halting reinvestment of cash that comes from maturing investments in the Bank of England's asset purchase facility. The remarks give an indication how the BOE will start to unwind almost £900 billion or $1.2 trillion of government bonds it bought during the past decade. If the new policy kicks in around 2023, remember, we're only halfway through 2021 at the moment, well, almost two-thirds through. when investors anticipate it could draw £400 billion out of markets by 2030. So we're looking well ahead, and the Bank of England considering doing nothing in the meantime. We always wondered, actually, that what they would do with all of these assets once they cash them in. And the answer ultimately is they could burn the money. Would that help the economy, we hear you ask? BBC News. Second-hand car sales soar amid new model shortage. We remember, perhaps 2 years ago, where we were writing off the second car market. One, because credit was cheap, people were buying new cars, or leasing them at least, and therefore there was a deluge of old cars on the market. Then, of course, there was the talk, and still is, of electric cars being mandated as from 2030, certainly in the UK, which would mean all these gas guzzlers would be redundant. And look how in such a short time this whole situation can change. Former Prime Minister Cameron made $10 million from Greensill before it's collapsed. A letter indicates the former PM received millions from shares in the controversial collapsed firm. We have to admit, we were quite surprised that he would even associate with a firm like this, bearing in mind that he comes from a privileged family already worth many millions of pounds or dollars. And we wondered why he would get involved. Well, there could be 10 million reasons why. In the US, headline, gender equality campaigner resigns over Cuomo ties. Yes, Cuomo is in trouble, and it looks like it's not going to get any better. Prince Andrew accuser files civil case in the United States. Virginia Giuffre alleges the Duke of York sexually assaulted her when she was 17 years old. Perhaps economically, this is really important. US job vacancies hit a record 10.1 million. It comes amid reports the country is still facing a labour shortage in sectors such as labour and hospitality. And that is very, very important, bearing in mind the level of unemployment is falling, but still a number of million higher than pre-COVID days. Why aren't these vacancies filled? Perhaps they're not paying enough, who knows? An infrastructure bill to fix more than US bridges. The $1 trillion bill takes aim at issues from buckling bridges to global warming and remote working. So, what's happened to the markets? Well, first of all, dollar index. We said yesterday it won't be long before it hits 93. It has done that over the last 24 hours. But it's at this moment, it's 92.9900. It's going to 93, everyone. Oil prices gained a little after their quite sharp fall over recent days, with Brent crude just touching $70 and WTI crude just over 67.60. Stocks. Well, Wall Street yesterday, the Dow Jones closed down 0.3%. The S&P was down 0.09%, but the Nasdaq was up. In Asia overnight, all markets up, ranging between 0.25% to 1.25%. And currently, but it's still relatively early trading, we have the FTSE, the UK one down, unfortunately, 6 points. I was hoping the FTSE would be up, as I would be making a sale from my pension portfolio. I own no stocks bar 2 that I purchased back in 1980. I won't name them. They didn't do well, which is why I've got them still. And they were very highly speculative stocks. One of them, in fact, in oil exploration. But I do have a reasonable portfolio in my pension that I self-manage. And I will be looking very shortly of reducing the stock holding, shareholding, certainly in UK and US shares. Eurostoxx index is up, and the rest of the indices are also up, but very marginally indeed. Now we want to draw your attention to this. Today, in terms of reporting, we have the NFIB Small Business Index for July. That will give us an indication of where commerce is heading. We don't think it's going to be hugely impactful, but it will give an indication. Productivity, preliminary for quarter 2, and unit labour costs for quarter 2. Again, nice little guide. Be interesting to see what Cleveland Fed President Loretta Mester says today, but it's tomorrow our attention should be directed. We have the Consumer Price Index, core CPI. Why? Because let's look at the price of gold over the last 24 hours. We're down $10 at $17.30. As you can see, we had, if I go for the week, I could show you the start of the week. It was here. We then had our flash crash, recovery. Then yesterday, retracement back down as we suggested it would happen. This morning, slight gains, still well below Friday's close of 1764, some $24 below. Is the market trying to recover a little? Yes, it is. It certainly is trying. Will it succeed? Tomorrow could give an indication. And Thursday's jobless claims and producer price index, but the jobless claims will also be watched quite closely. Looking at silver, let me refresh the page. Silver is down 38 cents. You can see, let me do it for the week. You can see the flash crash here. It ended last week at 24.36. Note, it's 23.46. And you can see again here, this was the fall. Look how low it went. Some recovery. We're getting a little recovery. I don't know why this help thing is coming up. It's retracing its steps, slightly different to gold at the moment. If I click on the live image here, this is live now, with it literally within seconds. You can see there's a little bit of uncertainty. Where is the silver price? It's trying to find its feet. So how do we see the day going? Well, frankly, we're not going to expect a huge amount of change today, but we will expect more tomorrow when those figures come out, unless, of course, there's some political announcement or that we are unaware of at this moment in time. We certainly draw your attention to 2 videos that we produced in recent days. Why gold and silver crashed on Friday, mainly the jobs report, not entirely, but mainly the jobs report. And then gold and silver plummet, further thoughts. And our yesterday morning video did very well. Thank you to everyone who watched it and who gave us a thumbs up. We do appreciate it. It did very well, but I suspect that's partly because, of course, everyone is now wondering which direction we see silver and gold heading in. It's down to the value of the dollar. It's down now to jobs growth, inflation, and economic data. That is going to determine the price over the coming weeks. We still think there are some headwinds, even though gold, you can see, and from the physical, we contacted yesterday a bullion dealer who's running out of gold coins. Yes, running out of gold coins. Whether that's because he hasn't bought enough inventory or whether the demand, they always claim it's always the demand, so we have to take them at their word. So people are buying these dips. And frankly, we don't blame them. We really don't. Even if gold falls another $100, yes, you'll be rather annoyed because you could have got your gold cheaper. But in the long run, it's not going to matter too much. Cryptocurrencies on a tear. Bitcoin up again over the last 24 hours, nearly touching 46,000. Everyone's predicting it's going to 50. And if it breaks 50, it's going to beat all-time highs of 64. And Ethereum doing even better because of recent changes on its platform, and there's just no stopping the cryptocurrencies at the moment. Market cap 1.86 trillion. We said before this term is out, meaning this year, it's going to be above 2 trillion. In fact, it could even be above 2 trillion before this month is out. We'll wait and see. Thank you for listening. Please give us a thumbs up, subscribe, press the bell sign. Have a great day. If anything happens during the course of the day, rest assured, we'll produce another video. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.